welcome to BQ Prime. You're watching Earnings with BQ, and our guest today is Mr. Ramana, CEO of Branded Markets of Dr.Reddy's. Welcome to the show, sir.
Thank you, Moni.
It's a pleasure having you again, and with a great set of numbers this time. A phenomenal growth on the PAT, 18% year-on-year, a great performance on the EBITDA front, 30% plus margins. So what has led to this phenomenal growth in margins specifically? Also, is this sustainable? What sort of guidance would you give for FY'24?
Sure. So if you see the growth that we have demonstrated in Q1 is in line with our strategy. And also it's a growth that is across the market. So other than US as a space, we've also grown in emerging markets, we've grown in Europe, India as well. So in that sense, it's an overall growth of things. In terms of the margins, it's a combination of product mix, it's a combination of how we're working on improving the productivity. If you say from a point of margin, what we had said earlier in our investors meet is to say that, we are comfortable from a point of delivery of 25% EBITDA and 25% ROC. So you could have fluctuations between the quarters, but that's the way I look at it.
Okay, so you're maintaining the 25% margin guidance. So also now I have a question on the US performance. It's been great year on year, 79% hike. What has aided? So of course there's some element of rev limit is what I understand. If you could help us understand how much of it is rev limit and how much has the growth been in the base business, and what is the future, the next coming few quarters, how do they look like?
So the good part of the growth, as far as the US is concerned, it is growth first on the base business, and on top of it, we have the generic Revlimid opportunity. So that's a combination of both of it. As far as the opportunity of the generic Revlimid, I can say that it will continue to be meaningful in the next few quarters.
So could we just understand if this is the kind of growth rate for the US that we are seeing, or maybe the revenues that have come in? Are they expected to stay throughout all the quarters?
So the way I would want to look at the US business, Moni, is beyond Revlimid, we have products that matter for the US, and we obviously are in various stages of filing and getting the products into the market. So I do see that we will continue to grow in our number one market, which is US.
Now, I'd like to ask you something about the India business. Year on year, there's been a slight degrowth. Of course, there have been certain elements of the divestment income that had come in the quarter last year. But how do you see this going forward? And would India still remain a very prominent opportunity, or are we looking at other markets? Also, what sort of, are we planning some new acquisitions and deals here? How is the growth looking forward?
So India continues to be a number one focus market. So if you look into from a point of growth, the three things that got impacted. One is the divestment income that we got in the last quarter, the amount of sales that we lost for the brands which we divested, and Enilian. So without that, it's a high single digit growth that we have got for India. But because of the fact that India is a focus market, we are making the moves as far as innovation is concerned. There are moves on three pivots, I would say. The pivot one is about getting access to innovative products. These innovative products that we're getting access to are pretty much in our therapeutic areas where we have our endowments. The second one is a pivot on consumer health, both in terms of OTC and nutrition. You would have seen that we recently launched a product for kids immunity. And the third pivot is with regards to the digital. So I do see that these innovations, apart from our organic growth, will continue to drive the India business. We'll continue to focus. So if I look into from a point of BD, apart from licensing, brand acquisitions, should such opportunity come up, India would be the primary market where we would want to focus.
So do we have some targets for inorganic growth?
So I would say that we continue to look for opportunities, and if the price is acceptable to us and we feel that we would be able to do justice to that particular brand or a set of brands, we will continue to focus on them. While we
So
look
is there
for
any? Yeah, sorry.
while we will continue to look for inorganic opportunities, we have upped the action as far as licensing is concerned. So you would have seen that in the last quarter, we have done deals bringing in an NBE in the area of oncology, doing a deal on CD19, which is in the CAR T cell therapy. So we will continue to focus both of getting in licensing of innovative assets for India, as well as any BD opportunities that might come out.
Also, sir, I really wanted to understand trade generics. So, with y'all have recently announced the entry, and we've not had a chance to connect post that. So, just trying to understand your plans around it. Also,
Sure.
what is the sort of opportunity that you're seeing here? Um, a lot of Jan Aushadhi stores are also coming up. So, is that going to hurt the branded formulations that exist? Could this typically translate to what's happened in the US? Are we heading towards there? What is your visibility on this?
So I would say that today branded generics will continue to be an important part of the Indian pharmaceutical market. Trade generics is now gaining momentum and it has got a meaningful market share within the Indian pharmaceutical industry. For Dr. Reddy's, it's always has been about how do we ensure access of our products to as many people as possible. So what do we see in the market? There is a need for high quality products in the market. We represent with our own portfolio about 50-55% of the market. So there's a good portion of the market where we're not present with our product offering. So that is an area where we would focus. The idea is obviously to ensure that we bring in high quality medicines to the relevant target population in India.
So what is the kind of revenue contribution that we are seeing there? Also, usually the margins are softer on that front. So while you've guided for 25% and it'll take some time for the trade generics business to get to that level, do you believe that it could eventually soften the margins?
So if I see today, we've just launched the trade generics this quarter. Yeah. So it will be too premature for me to kind of say how that will play out. I think we will learn in the next 2-3 quarters in terms of how has the trade as well as the patients taken to our products, what is the repeat purchase, and how has the corporate equity that we have with various stakeholders played out. So I probably would be in a better place to answer that question a few quarters down the lane from where we are today.
Sure, sir. Also, any updates on other markets
Sure.
that you're targeting? Are there any big product launches in the pipeline? Also, an update on the US market. You said that there's quite a huge pipeline for FY'24 and FY'25. So if you could shed some color on that, what would be like the main products? And also biosimilars.
Right. So as far as emerging markets are concerned, I think is again going as per the strategy. So we have, let's say, three factors. One is the branded side of the markets, and the other would be the leverage institutional markets. Both of them are doing well. And you would have seen that we've launched quite a number of products in emerging markets. And the strategies are playing out well. In Russia, where we continue to promote and ensure availability of the product, this quarter has been good. There's also been some base effect, but the growth has been good. And we've had a positive evolution index as far as Russia is concerned. Continue to grow in important markets of Brazil and China. You would have seen last quarter we got 4 approvals, which is also in line with our expectation to build a portfolio for China. So important markets within EM and the leverage markets within EM continue to benefit of the product development that we have for US and Europe. As far as US is concerned, what we're obviously working on are meaningful products that are either in the space of oncology, in the space of injectable complex assets that we would want to bring into the market at various stages in terms of development or in terms of the regulatory approval. We do feel that we would be able to bring them into the markets in the next couple of years.
And so my last question, it's going to be a follow-up on Russia. It was a phenomenal quarter, of course, on a low base. But do we see these sort of revenues continuing? That's one. And the other on China, do we see that becoming as big a market as maybe Russia is in the emerging markets category, or even bigger? What is the potential?
So when you look into Russia, what you see is companies which continue to promote and continue to make the product available are gaining the market share. So we do see a positive evolution index for ourselves. As far as China is concerned, it's about how do you build your assets. If you do see the best of class Chinese companies, they are logging in between 14, 15 products per year within the generic space, and then trying to get the products into the GPO. We have the same aspirations. We are in line to get to that number on a consistent basis.
Is it expected this year?
So what you see now in the last quarter, we have been able to get four product approvals. We expect approvals in the rest of the year as well. And we're logging in between 14, 15 products a year in China.
Thank you so much, sir. It was a pleasure having you with us.
Thank you. Thank you, Mona. Thank you for your time.